Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, June 24th. Quite a week thus far. It started, of course, with China's decision this past weekend to float the yuan and start revaluing it higher against the dollar. Naturally, the dollar losing purchasing power against the Chinese currency. The move so far in the yuan has been very little. They're going to take baby steps towards revaluing the yuan higher, which is the right thing to do, and overall it will provide some stability to the market. But we've already seen the yuan trade at a 5-year high against the dollar. And as I told you in my flash alert that I sent to you, almost everyone who's following me on Monday of this week, this is definitely the beginning of the next phase of the dollar's devaluation, a protracted decline in the purchasing power of the dollar that we've already been seeing going on for nearly 10 years, with the dollar worth 31% less than it was at the beginning of this decade, and about to enter the period where eventually, over the next couple of years, we're going to see a very rapid decline in the value of the U.S. dollar. We're not there yet, but China's decision this past weekend is certainly very significant. I believe it's a very significant sign that's ushering in this next phase, which soon should be starting, probably towards the latter part of this year. Right now, the dollar, we'll go to the dollar index chart that I've been tracking for you, remains in a pretty much choppy trading range. It has topped, as I indicated last week. We'll probably see it pull back. Basis the dollar index down to about 86 or so, 85 or so, and it's going to meander back and forth between this slice of the pie here, upper resistance at 89.90 and lower support at 8600 on the dollar index for the next couple of months, probably through the summer. Then however, I do expect the dollar to roll over and start moving below this cyclical uptrend channel here and start working its way towards a slide to new record lows early next year, and even lower going into 2012. Let's take a look at gold now. Gold is performing very, very nicely. Let me drag this chart down so you can see it better. There we go. Gold made a record high on Monday morning on the news of China. It then sold off but held support in this 1239, 1235 level, and it's attempting to rally again. You can see the path of least resistance is higher. There's considerable support between 1200, this horizontal red line, and 1220, the second horizontal red line here. That's system support. It's not chart support. I've put those lines in there so that you can visually see what my systems are telling me. But there's also technical support from this uptrend, cyclical uptrend channel here at about 1225 or so. Gold is going to bounce around a little bit because the dollar's meandering at the moment, but we do want to see it hold 1200 at the worst case. And preferably even 1219, and then the next move up should see gold go to 1300 and higher. Let's go now to the Dow Industrials, where we've seen quite a bit of action because of the news out of China this past weekend. You'll recall I was forecasting move to 10.4, 10.6 in the Dow, coming off the 9,800 and change lows of a week or two ago. And we got right up to 10,594 or so. And then yesterday had quite a steep sell-off in the Dow, bringing it back down to 10,293. I believe the Dow is topping in an intermediate term rally, coming off of the high, the March 09 to April 26th rally. We should soon start sliding below 9,600 down to as low as 9,000, even 8,700. We might, however, see the Dow chop around for a few more days, even another week, in this 10,000 to 10,500 level. The bottom line is you do not want to be long stocks here, with the exception of gold mining shares and key select oil and energy shares and natural resource stocks. Excuse me, I had a little bit of a cold the other day. Again, I've been warning about that for the last 3 weeks. If anything, you want to take an inverse ETF position on the Dow or the S&P 500, which I've recommended to my subscribers to hedge up stocks that they might not be able to get out of in things like IRAs and 401ks. The downside is considerable here. It may take a few more trading days, maybe even a trading week to start to play itself out, but the Dow could easily fall to 9,800. It's in the cards. It could happen today. It could happen a week from today. I just do not want you to be aggressively long stocks, with the exception again of gold mining shares, some key select natural resource stocks, and oil and energy positions. That's it for today. Please stay tuned to everything I'm publishing right now, because the markets are at critical turning points and there are lots of terrific opportunities, not only to protect your wealth, but of course also to profit. Till next week, have a good weekend. This is Larry.